Okay, guys, welcome back to my YouTube channel. And this video just a recap of this week. Today's Friday. Market basically closed. The forex market hasn't closed as yet. It's closing at 5, but we're not really expecting much price action to really happen. The week already did its thing, and I just want to give a recap on how this week performed. Usually I do this one like when the market close, so I definitely would make a second video later this evening when the market close. But just giving you a update while price going on, just to illustrate. Once you understand what the dollar index doing and once you understand how the dollar index the dollars have a direct relation with the foreign currencies, and well, not just foreign currency, but the currencies you trade. But I already explained the currencies I trade, GDP and Euro. You'll understand how it relates to those pairs based on the dollar index strength and weakness, right? So let's hop in right back into it, hop in straight into it. This last week when the market was closed, we were looking at the weekly highs on the dollar index, this daily volume imbalance to be traded into. This is a volume imbalance because on the daily chart we just see candle wicks and we don't have any bodies. So there was a reasonable draw. Also, we had a swing high, the most recent swing high being on Thursday, the 7th of September. This high right here, that was the draw for this week to be traded up to most likely. And we can see that we did trade up into it after having some rejections at the volume imbalance, daily volume imbalance. We traded through aggressively, and we are there now on Friday. So the likely draws we already understand and established would have been to trade up to these highs here, right, on the daily chart of March, right before my birthday. And on the weekly chart, well, on the monthly chart, we have, this is our entire, as you can see, fair value gap. But on our weekly chart, we have a clearer insight on what price looking like. So we could reasonably expect the highs here to get take out, and for the remainder of the year, we would see if the dollar index would want to trade up into here. And obviously, if the dollar index looking to trade up, foreign currencies would be looking to trade down, as we stated. With our analysis, we was expecting on Euro, on the weekly chart, the swing low to be the draw. You can see it delivered it went a little bit underneath the swing low. I can expect it to may want to go down a little lower, because that little, if you could see on the, what is our week chart, we'll drop that daily chart, we'll zoom in a little bit. It just will wick past the lows, right? That sometimes that does act as the purge on the liquidity. Sometimes you might want to go down and go a little lower into it, and then trade up. But the expectation of the swing low to be the draw, we see that it was the case, and we just have to see if it would want to go lower to these relative equal lows underneath here. So the likelihood is that could more than likely be the play, because the dollar index has some more strength. Look like it want to give some more strength. And let me just clear the screen. We could see that the low that we were looking at, okay, I can move this here because the week basically finished. Move this across here. So the low we're looking at, the draw is the swing low on the weekly chart, but the first low hanging fruit that we were looking at was the daily, this low, and then these relative equal lows. We see that today it delivered and it traded through. You can go back and watch the old videos. We were looking at that. I think the very first video, the second video is where I mark up the chart. We were looking at the stability draw. Let me just give a recap of how this week went. This week we had a really good week. I didn't trade the remainder after Tuesday, I believe. After Tuesday, So you see the dates here, the 9th. So everything was done on the 9th basically. The 9th being the 9th was the 9th of September. Oh, sorry, the 12th and the 13th. That was the month. My bad. 12th. So Tuesday and Wednesday, we just had 2 days, and we were profitable. Again, this is paper trading. I would definitely put in the beginning of the videos that this is a simulated paper trading. This is just to give you an idea of how I trade. I already explained that in previous videos, so I just want to make the video shorter by just going straight into what I want to get into, right? So 2 days, the goal of I started this account with 25k flat, and this is where we at right now. My daily goal will be 1% of whatever account I have, so that'll be 250, and I have a weekly target of 750 a week. Once I reach my target, I am done. I move away from the chart, and I don't engage until Friday's close. Look at the chart and then look for next week. I can make 7% in one day in one trade. I would be done by the end of that. Once I see that 3%, I am done. I am done. Obviously, what got us to this threshold quickly were understanding how the foreign currencies work together, and because we understand how the dollar index works with them. So I was able to enter. Like if I was going long with pound, I more than likely would go long with euro. If I'm going short with pound, I'm more likely I'll go short with euro, because I understand how they move and the relationship that they have, right? They typically move together. That's sometimes the way pound would be going higher and euro be going higher. For example, if I drop to our chart, I think it was Tuesday. Tuesday. Euro was more bullish than pound, even though we had the I'll get into the weekly profit and everything just now. But we see Tuesday was way more bullish than pound. This being Tuesday price action. Right here, Tuesday lows, we see we had a move of about 60 pips on Tuesday, whereas with British pound on Tuesday, from the Tuesday low to Tuesday high, we only move up 42 pips, so even we did buy. We bought at the Tuesday low on pound, and we bought Tuesday low on euro, and my euro trade actually hit take profits, and I took off a little. I took off a partial, and allowed the rest to trade up into take profit, and our British pound did also hit take profit too. So that is what was responsible for pushing us to the threshold of the I think we make a little over 4%. I think we make a little over 4%. So this video is just to illustrate that we were looking at the lows on the weekly chart on British pound to be the swing, not to be the draw, which we see in price gravitating, being drawn down to it. And the low-hanging fruit first objective was this low, and then these equal lows. And we see it did pan out. Now, I want to get in a little bit more technical and discuss the weekly profile, right? So, the title of this video would be understanding the weekly profile in relation to the dollar index. So, before I get into that, I just want to show you one last time on how strong the standard deviation setup is. So I just put on the Asian kill zone indicator here, only to help me find the it has really helped me find the 8 o'clock candle way easier, because I know it's the second candle in. So at 2, we drag the fib across, low to high, right here. So we can see at the second standard deviation, I think didn't rest it directly on top the right about there. So right at the second standard deviation, right to the, not to the pip exactly, but just about just over the supply standard deviation at London, we saw that price did trade up. In fact, 2 standard deviations up. So I'll just highlight it in. Oh wait, my bad. Right, so it just went over just a bit. So I'll highlight it in right here. Red. And we went up 2 standard deviations. I'd like to put this in green. 2 SD. Right, so. Oh my, damn it, man. Right, so this is a nice illustration of how strong the standard deviation is. So I don't want you all to get used to, okay, just run the fib, and because that kind of getting you dependent on the Fibonacci tool and not letting you be focused on the main thing to look at when using standard deviation to look for setups, right? Yes, the tool itself is strong, but it's have a little bit more to it. Actually, way more to it than just running a fib, finding the dealing range from 2 to 8 and running a fib, right? Because it have times where if you don't understand the model, the program that you're in, it would not work. No, it would still give you the low, but it would kind of, let me just say it wouldn't work. It wouldn't work. You know, it wouldn't work. And it had a couple of times where I wasn't really sure. No, not really sure. I wasn't confident that that was the specific low or high for that particular time, and I got in when the higher time frame narrative was still, it still wanted to go lower before it stopped to do the retracement back up, and I got hurt, you know. But again, that was around the time when I was being a little too overzealous in entry, and I was able to learn the first, when it comes down to the first standard deviation, wait for the subsequent run on stops before it decides to take off. Yeah. So I just really want to illustrate this point here. So I'll just run back the trend line to highlight the start of the week. So week start here, right? I just thicken it a little bit. So the week started off here, and it more or less going to end right here, right? So these highs not expected to get takeout this week, right? So this is Friday high right here, more than likely, and that 3 times thickness a little, not look, it don't look good, right? So I will just do the analysis on the pound, and what happens on pound would be the same thing that happening on the same mindset that for euro, right? So we already understood that the dollar index, what it was reaching for, right? So I wouldn't get back into this. So with the understanding of the dollar index, and we understand dollar index seeking higher prices, foreign and euro would obviously be seeking lower prices. So I'll just remove this line because that liquidity pool was traded through. I remove this one because this liquidity pool was traded through. And I remove this one because this liquidity pool was also traded to. True, right? So now I know that if there's any more draw, right, the draw would more like, actually I'll put back this second one. This one here. The draw would still likely to want to go a little lower than this one. Down, sorry, this is Euro chat, my bad, damn, my bad is the dollar, is the GDP are we looking at? I wanted to give the examples for I'm not that I hate on euro or anything, but I like to use the British pound, and that's the one we were really looking at and highlighting in the first set of videos. So on the weekly chart, I will just remove this sell side liquidity because this was traded through. I'll remove this standard deviation because that already out of play, and time of day already over, so the third one is out of play. Right. So from on the daily chart, the first low, hanging fruit low, was this low of the 8th of June and the 7th. First low hanging fruit is the 8th of June, and the second low hanging fruit objective was the relative equal lows on the 6th and 7th, right? We see that delivered. So the next low we expect to be traded through would be this sell side liquidity pool. I like to put the type if it's a week, hour, so I put the daily liquidity pool, and this one is the week. Is the weekly. Is the weekly one. Again, I just like to label my higher time frame area of interest because I know higher time frame have the most precedent. And looking like it forming a swing low here, right? On the daily chart, and looking like it want to do that. So that's pretty interesting. So drop to the hour chart. So right, this is where the key is in understanding how to combine the standard deviation with the weekly profile and everything, bringing it together, right? Because as I said, it's not just about just taking the fib, finding the dealing range, and extending it up and down. When you understand what you're looking for, that is when it becomes simplified like that. And this is where I'm going to explain. So, as I stated, we already understand the dollar index seeking higher prices, so we would reasonably expect the foreign currencies to seek lower prices, right? When take notes of this. The key is weekly candle direction. All right, follow along. The weekly candle direction, right? That is number one. Once I could find the weekly candle direction, right? Actually, sorry. Number one is the narrative, seasonal tendency. Once you understand that seasonal tendencies have a strong impact on the market, it will frame so you can know, okay, certain months this will be bullish, certain months this will be bearish. All right, that's the first thing to understand. The second thing, which is kind of in my hierarchy or ranking, this is actually for me the most important thing: the weekly candle direction. Once you understand and you're trading in the direction that the weekly candle is more likely to trade to, that is a very, very, very strong tool to understand and have. A very strong thing about price to understand. You already know dollar index seeking higher prices, so when you open your weekly chart for foreign currencies, look for where the swing lows in price are, look for where inefficiencies in price at, or gaps. So if you're on your weekly chart and you're seeing, now just clear it. On the weekly chart, we're seeing imbalances. If I pull up a month chart, that would be a whole like buy side and sell side inefficient, right? And if we drop that daily chart, we would see where the draw is. So when you open your weekly chart and you see like swing lows and where price only really delivered on one side, and it have an inefficiency, a void of the opposite party candle, like it missing, it have a void of that, then you combine the understanding of, okay, higher prices being seeked by the dollar index, or lower prices would be seeked by foreign, and where the swing low form, that would be the draw, because underneath swing lows would have a liquidity. And we see underneath the swing low here on the British pound, we have a liquidity void here. I already have it highlighted there, and we have a gap, a weekly fair value gap right here underneath that liquidity void, right? Because there's a liquidity void because there's only wicks and no bodies, right? Same thing on the daily chart with the dollar index, only wicks, no bodies. So that where the draw would be. So Once you understand that, the narrative, seasonal tendency, and we expecting the swing low to be the draw. I'll just put weekly here. Yeah. Then that is a strong indicator, right? Then the second thing, when you have the narrative and the weekly, the kind of direction would be the weekly profile. So if I had to rank it, I won't lie, my ranking would be the direction the weekly candle going. Not lie, that's the proper direction. I'm going in proper direction. Narrative, weekly candle direction, and then the weekly profile. So what is a weekly profile? So if you're in a sell model, meaning that we're seeking lower prices, we look for the high of the week to be formed Monday, Tuesday, Wednesday, right? Again, the core content teaches you this. ICT core content teaches you this, right? And I urge you guys, go through the core content from ICT. Now, I simplifying it because I understood this is what I gravitate towards, this is what I resonate with. I see a lot of strength in it. You really get quality setups, right? But I would always want you to get it for yourself, learn it for yourself. You might find something else from the core content that you gravitate to and like that. But again, this is just how I look at it. So this is the strategy I use, right? And I will get more, and the terminology and stuff else I will be getting into going forward. You need to understand more things in price to really understand what I'm saying. Obviously, I would explain it, but if you go through the core content and then you come to my channel, it would just be like we just talking one slang, one language, straight to the point, nice and like if all of these brethren. So the high of the week when we bearish typically forms on Monday, Tuesday, Wednesday, right? It have a 70% chance that would happen. Now, if you don't get it on those days, anticipate a Thursday session market reversal. So what I mean is that, let me say we bearish, but Monday open, trade normal, right? Then you see Tuesday trading up higher, but we bearish, we expecting higher prices for dollar index, but foreign currencies making high on a Tuesday. You went short on Tuesday high, but it wasn't the high for the week. You got a good short, but it wasn't the high for the week, right? Then you notice Wednesday trading up over, looking like it want to contest Tuesday, right? And Wednesday don't give you much of a range. Like we say, Wednesday just consolidates. It just whips so back and forth within a tight range, right? But like you say, it get 80 pip high to low, but within that 80 pip, it moving 20 down, 20 up, 20 down. So the market sometimes when it consolidating, it will give you real pips throughout the day, but it will give it in a tight range, right? And then we see, so Monday trade, Tuesday trade over, then I see Thursday open, well, Wednesday was consolidating, then Thursday open, and Thursday trade up over Wednesday and Tuesday high. And you're thinking, well, maybe I'm wrong. Maybe, the dollar index probably selling off, and you go long Thursday, only to see the market dip down, right? That does happen. Right? It don't happen all the time, but it happens. So once you understand what the dollar index seeking, and you don't get your higher the week Monday, Tuesday, or Wednesday, look for him Tuesday, right? Stick to your understanding. Nothing wrong if you just wrong that entire weekend. Like we see the dollar index did sell off, and Thursday break out and go up. That is okay. You need to you understand you won't always be 100% correct. It's not about being 100% correct. It's about finding a strategy that you can rely on and give you a very high success rate, right? Because it's supposed to have good risk management regardless. Okay? And that's why I like to use this strategy, even though it's a week. My strategy is to find the weekly high. Like for example, if we had sold, remember we were looking at the high on Monday. If we had sold this, look, that was the high of the week. Look for euro, same thing, Monday, the high of the week. Now you had to sit, you get through here, and then you might get scared and want to sell because you come back up here. But then you see, look, it was the high. So when you understand the weekly profile, it gives you great comfort. Not saying that it can have a midweek reversal on it and Thursday just somehow spike up and take the high. That's why we have our targets, our threshold. Okay, I just want to get 40 pips for the day. I'll take a little partial or something at 20 pips, or maybe 25, depending if they move running or something. That's up to you and how you take your partials or whatever. But it's just knowing that and trusting that you understand the weekly profile, right? So after you understand the weekly profile, the next thing is the dealing range. The dealing range would be the 2 to 8, the 2 p.m. to 8 p.m. That's where it's finding your central bank dealing range. And then, well, the hardest thing is to know is if it want to go to 1 standard deviation, if you want to go to 2 standard deviation, if you want to go to 3 standard deviation, or if you want to go to 4 standard deviation. And this is the only thing that it was a challenge for me. And recently I really start understanding which one of the deviations it would want to go down to. And as long as you how to put this, my challenge with my only problem in ICT that was self-inflicted was after understanding and going through its content, and you really understand how prices move, you just have this, for lack of a better word, I would say entitlement, that when you enter a trade, it should go your way one time. You shouldn't have no drawdown, you shouldn't have to sit down through no small retracement in your equity. You shouldn't see nothing red. So it have plenty of times where I'll get in a trade and it would ultimately be a winner. But I would close the trade or I would take something off the trade because I seen my money, my equity in the drawdown for too long. And I would close the trade only for it to take off. That has happened to me multiple times. It actually happened to me so much, it actually happened to me in the funded, where I'll be like, why this not going my way by now? And I will close it, and only for that to be, that was actually low of the week. It was any trade of that was the low of the week, the high of the week, or it was any trade that would have been ultimately your TP. It happened many times where even the account that I currently have, where when I came out of drawdown, I was in winning positions and I was taking partials too early, and I was never letting my trades take profit. So I'll close it early and whatever, and that really would take away from your profits. Cause come like if you're going to work and your boss want to get you $10,000 and you're like, nah, give me 3. Or let me say your salary is like however much money it is, and you just get your boss back at 60%. Like, nah, I was just over 40% this month. So that's something I had to fix. And what will help you know how far any standard deviation, if it's standard deviation 1, 2, or 3, which one to get in at, your higher time frame perspective. So if I go to a forward chart and we look back at the price action that the entry that we took, I believe this was the Tuesday. This was Wednesday, right? So in the last video, I think it was the 3rd chapter 3 in the playlist. I was looking at the draw from this swing low and this swing low, and I'm gonna just write it better. Where is the where the brush? Damn it, man. Alright. This low here, whoa, and this low here, right? Those two swing lows, when we were looking at price on Wednesday, I was looking at that to be the draw, right? And we trade down into it right there. Wednesday. Right. Actually, this is CPI. I was supposed to come back and because I did say we're coming back after CPI, right? This price action here was CPI. And if you guys can remember, I got in here And what I did was I just brought my stop loss up into here. But before CPI happened, I actually had closed the trade. You know, I closed up most of the trade, and my stop loss was already into break even. So when CPI opened, it trade down. I was saying that CPI more than likely. Oh shucks. If you could go back and watch the video, I said CPI would have trade down and trade down into the swing low here on the 50-minute chart, and it did right into it. And but I was supposed already into break even, and that's when I had the small amount, the 50, the half standard lot. So CPI trade down into it, and then it traded up to contest Tuesday high. We trade over Tuesday, and then ultimately sold off. But this was the second standard deviation right. So this was right. So we have one standard deviation. Right. So we went as well the second standard deviation for CPI, but I got in at 3 o'clock, which was 1.5 standard deviation with a 20 pips stop loss. I think it was like somewhere around here I got in with a 20 pips stop loss. So see, would have been good. So the question is, how would you know when to get in at which standard deviation? Remember, this line, this trend line here in blue was the swing low from the 4-hour, the 2 swing low on the 4-hour chart we were looking at, and that swing on the 4-hour chart was also the weekly low of last week. All right, now that was the nearest sell-side liquidity pool, even though we were looking at lower prices being this down here on the daily, which is 36.90, to ultimately be the draw on price. The most recent was the swing low on the 4-hour chart. That was the blue trend line, and it traded down into there on Wednesday, right here, this price action here. And at the time of day that I typically enter, you see 3 o'clock. That is a strong. I know the kill zone starts at 2, but you could get in right at the kill zone, but then you will have to sit down through some drawdown. I like to wait for the little run on stops that London like to do before it trade off. Again, when you get familiar with the session you're trading, whether it be London or New York, you will start to understand the characteristics. London and but price like to take a little dip down once it have a swing low, and they still have time in the day. It more than likely would dip down into that swing low. It wouldn't go all the way down like that unless it have like a news or something. But it already did its job by taking off the last week lows, and then it just touched down into it a little bit again, and then it take off, and then it created a swing low. So the news driver at with CPI, it was a reasonable expectation for it to touch into that swing low for the New York session before contesting the highs of Tuesday, right? So that was expected. So the only reason why the entry here at the second 1.5 standard deviation at London at this point in time, because this didn't happen, this price action didn't happen yet, was a strong entry, because if you drop to the 5-minute chart, Tuesday, right, after London took out last week low, it broke a market structure here, right? No, it didn't broke a market. Sorry, it just traded down here, and it just swept some lows here, right? It swept the lows because it really wanted to fill this big gap in price here. That's where it really wanted to fill before ultimately selling off. Because what's going on, the market would seek higher prices to sell at a premium to think about it like anything valuable. Prices are already low, so we don't have much buyers already in the market. So you need to engineer the buy-in. So it created back the sell side, seek higher prices here to get people to chase. So it created back the sell side here, but it would have to more than likely would want to fill this imbalance it created right here, deliver higher prices, right? Take the buy side liquidity above these highs here. Alright, this was Tuesday high. Take that buy side liquidity, engage in engineer more buy side liquidity, and then ultimately sell off. Because why? The weekly profile we already understand is bearish. Monday opening price, Tuesday opening price. Right? So we already see that we was at a premium. Right? Remember the week open here. So anything above the opening price is premium, and we understand that we bearish. So that in itself was a high probability sell. All this inside here is high probability sells. All of that. Right? So that's the power of understanding the weekly profile. Now it have breakers and your bearish breakers, bullish breakers, and all those things. And I actually don't use the bearish breakers and the bullish breakers. I did mention it in the last video. You have a bearish breaker. I know what they look like. I know how to identify it. I know what they mean. I know the strength and power in them, but I don't use them because all I do is just understand. Okay, weekly profile, dollar index making higher prices. The weekly candle more likely to trade in this direction. I'm waiting for the weekly profile to form. I'm looking for gaps above the opening price. I'm looking for the gaps above the buy side liquidity pool from the daily chart high. Those sort of things. When it trade into that liquidity pool or gap at a particular day, that is when I engage. So once you understand the weekly profile and then you combine the understanding of your price action, which is the weekly profile, with the dealing range, that's how you get strong setups. Right? So if we had a strong sell here, use the dealing range from Tuesday to find Friday high. I wonder if we have an example where I think this is one here. Actually, this might be. I don't want to make it look like the dealing range is just the be all and end all. It have somewhere. I might get one here. The way. We use Wednesday. We're using Wednesday price action. We see we traded down 2 standard deviation here. And we had the 2 standard deviation right before. You had to make sure you use the standard deviation right between the hours of 10 and 12. Right? That is where after 12 noon, the standard deviation strategy would not work. So from after London lunch, which is from 10 a.m. to 12, London close 10 a.m. to 12 p.m. After that close at 12 p.m., standard deviation strength goes away. You don't use it. I repeat, don't use it. So we see if we had entered on the second standard deviation here, we would have gotten burn. Right? Unless we had take off early. Well, this is probably a news driver in here, so we definitely wouldn't have been looking at entry there. We would have waited for, we would have anticipated, okay, weekly profile is already Monday high, so these lows of Wednesday here would have been the draw, and we had no choice but to let price do its thing. I believe it had some news driver inside of there, so I would have already anticipated, okay, we're late in the week, weekly profile definitely underway, and it more than likely had a news driver in here, hence the reason why we had so much of sell-off. I would already been looking at, okay, I better should wait for New York, and we're looking at prices to go to 3 standard deviation. I know it's looking like hindsight, I could say that now, but again, you would soon realize that When it have a lot of high impact news, especially when you're late in the week, this is Tuesday, remember. You have to remember this is Tuesday. And we are already seeking lower prices. So the news would want to hurry price down. So we had to note, we had already had no choice if we wasn't going to sell at Tuesday open. We had to submit to allowing this whole price to trade off, and then wait for the 10 o'clock hour, which would have been in here. And if we wanted to buy, we had to buy at the third standard deviation or the 3.5 standard deviation, which would be half the distance between 3 and 4 standard deviation. So with standard deviation range was 24 pips, we would have to at 14 pips or 23. I give 24. So 14 pips, we could have been a buyer there. And we would have just capitalized on this buy. We would have gotten our 40 pips right at the 3 o'clock here. And guess what? We would have had to get ready to sell it right back. We had to get ready to sell it right back if we wanted to get this, encapsulate this price action here. You know, but more than likely, after we get our 40 pips, we would have been done and we didn't have to get into this. But again, you could buy into your sell. That's something I want to grow into a trader to learn. Buy into my sells and sell into my buys. Definitely want to get into that. Actually, could do it at some points, but again, once I get my move, I am done. You see, I don't even have like Tuesday and Friday open, because after I got my move Wednesday and Tuesday and Wednesday, I was done. You know, close off the charts. I only came back here to illustrate how our price action, the area we're looking at, price gravitating towards it. So we already know how next week going to open. So this video was supposed to be short, but I already know it's going to be long. When the market close at 5, I will come back and do up the chart. I will clear out all of this, and I will do up the chart for where I anticipate price to trade up for next week trading, and look to activate price. More than likely Monday look like it will be the high week again next week, but I can't really be overzealous and call it, because we could see the draws went down to the level of the weekly low hanging first objective fruit. This low is the draw. So you can see how the recent price down, but then price wanna play price playing going back up. This is how they engineer the liquidity, because they need to pay the orders. They have to pay the selling to the buying and pay the buying to the selling, right? But that'll be it for this video. I just try to make these videos short, but it's so much of technicals in the chart that no matter what I do, it does tend to always end up being wrong, you know. So this is just how it be when you're in the beginning stages of explaining and giving the information, and after the understanding is there with the deviation. Remember, these videos are gauged towards new beginners and developing traders, guys. Still developing myself, but it's to show that and to illustrate that understanding of just simple things could carry you miles ahead. I started off February this year I started off, and we're in September, but by May, June, I was already understanding price. I have never traded in my life before. This year, I didn't know anything about the charts, but within 6 months, right, I was able to grasp understanding, and within 8 months, I was able to really find my way. And 7 months on it, where I would safely say, yeah, I have something, I have an edge, and 6 months now I'm confident in this, because September is 9 months in the year. I started ICT in February, so it took me 8 weeks. So at the ending of February, March, April, ending of March, beginning of April is when I finished the core content. And from April to April, May, June, from April whole, and I'm talking about I dedicate the entire month, no days off, every day, every hour. So from April to May, ending of May is when I really backside of back test, and from May to now is the results of the back testing. is where I'm at now, and I already reached the stage where I could come on YouTube and I could discuss things. I could call price before it happened. I could look at levels. I could be confident in certain areas. And guys, I journal. I have a book that I write down stuff, but my phone, I have all my videos. I have my if I could show you, you would see. I have so much of information on my phone, so my phone is really where my journal was. I don't recommend that, you can lose your phone, but that is just how my phone was with me now, so I could write down things quick. Take notes. Dedicate your time to it. Trust me, dedicate your time to it. I would try to look back at times when the standard deviation didn't work. And I'm not even kidding you, don't have much times it didn't work. And I'm not trying to say this is the be all and all, but as long as you could tie it into everything, with understanding dollar index and the weekly profile and where the liquidity is, where the draw is, seasonal tendency and everything, telling you this is about a 90%, actually like a 98% win rate, but I would say 90 percentile, because if you understand that, if you don't be overzealous and gaining at the first, second, or third, once you can find your areas of interest and be patient to get in at the levels, the standard deviation level you're supposed to, it is a 90% win rate. It have times you will miss trades and miss entries. Like sometimes I didn't get the sell. Like the better entry would have been obviously the sells over the opening price, because that is where the profile is sell. So only buys over the opening price is where you want to get in. But sometimes there's putting news at those hours, so it'll be kind of hard to get in at that level, because you don't know if the news want to go a little higher before it go down, so that will come with experience and stuff. But so far, this right here, how I get in, it working for me. It working good for me. And with the risk management I have, even though I might see a little drawdown before it go my way, within the risk management, it's not much money that you will have to sit down and watch go away. $40 sometimes be 60. It may go as high as 170 something, but very few times is where I entered and it went totally against me, with the standard deviation. A lot of times after that, I blow my two accounts, because I used to have real tight stop losses, and I would close trades only for it to go my way, because I want to see it go one time. That's me being cocky, that's me, trying to be smarter than the market. And I see talk about that. I felt that, so I trying to urge people not to fall into that. Sometimes you have to fall into it to learn, but if you could hear it from me and not have to go through it, better you take it like that. Now, it have things you would ultimately have to go through, but if you could prevent it, better you try to prevent it. So I would end this video. This video gonna be real long, but the second video will just be the markup for next week. It wouldn't be as much talking about these things here. These terminologies will be more straight to the point, and the videos will be shorter. It might just be like 5 minutes, 6 minutes, maybe 10 minutes max. So I catch you guys later.